Welcome to In It to Win It. This is Steve Barton, and thank you for tuning in. Our returning guest today lays a golden egg about once every 3 days in the form of an email or article that gives us comical insight into what policies our big thinkers are implementing, what effects they think it will have, and what to do about it. The Doomberg Substack focuses on energy because, as they say, energy is life. Doomberg, thank you for coming back on the show.
Steve, it's my pleasure. Good to see you again.
Good to see you as well, sir. How's the chicken coop treating you?
Well, today's publication day. We just put out a really fantastic piece this morning called "Spilled Milk" about this amazing story of Chevron and its attempt to satisfy green mandates, only to step on a mine and have it blow up in their face. So, but publication day is always fun. We get to work through the comments and handle the inbound emails and hopefully see some conversion of subscribers to paid. And so it's always fun, and had a good chance to do a podcast or two and get reconnected with the world. There's so much going on right now. It's amazing. You can't really keep up with it. And so it really is a good time for us to be talking today for sure.
Yes. Not something you're going to find in the mainstream news. That's for sure. Okay. We are a commodities show by far. Maybe you could just give us a quick couple minutes on your base case for commodities, kind of focusing on precious metals, copper, uranium, oil, nat gas.
Sure. Obviously, the situation, the unfolding tragedy really in the Middle East over the weekend is throwing a lot of wrenches into the wheel, so to speak. We should begin, of course, by saying what a dastardly turn of events it was. The wanton murder of innocent civilians is always unacceptable, and unfortunately, it looks like it's going to trigger a massive, response by Israel. And one hopes that the war doesn't spread and cause true, catastrophe beyond the region. But it really is ugly to see. Glad we're not on Twitter as much as we used to be, because it's really hard to look at those images and not feel a sense of sorrow, really, about what humans are capable of doing to each other. It really is an amazing and sad and depressing situation. But it is, of course, one of the most important geopolitical events vis-a-vis commodities, probably in the past decade, depending on how things unfold in the coming days. So everything that I'm about to say is colored by our views as to whether or not this war will spread, or whether it will be relatively swift and contained. And that's really unknowable to you and I sitting here today at this point of recording. So I would say oil markets obviously took a bit of a jump up on the news, and I think there's a lot of puts and takes to be considered if you're modeling oil. Obviously, there's slack capacity in OPEC, Saudi Arabia, OPEC Plus, that could come back online in the case of an emergency. One wonders how motivated they would be to do so, but I think the fact that there is excess capacity that could be swung back online relatively quickly is keeping a lid on prices for now. Although I would say that if the war moves to Iran, for example, and Senator Lindsey Graham's foolish comments over the weekend about we should be taking out Iranian refineries doesn't help things and could make it a self-fulfilling prophecy at this point. But oil is obviously very tinderbox right now, and a wrong shell at the wrong location could see $10-20 to the upside, or if the war doesn't unfold, you could see $10-20 to the low side. Natural gas is more interesting. This morning there was a really disturbing report out of Finland about a potential sabotage of a underwater pipeline between Finland and Estonia, which would disrupt Europe's ability to distribute inbound LNG ahead of the winter. That is I think, a potentially very dangerous development. If we begin to normalize the destruction of key energy choke points, all bets are off for all commodities, frankly. So we see the Dutch TTF contracts flaring up to about $15 per million BTU today. Obviously, at the peak of the last crisis, it touched $100 intraday, and the same molecules trading hands last week in the U.S. for $2.50 per million BTU. But even the Henry Hub contract is mid threes today, starting to get a little frothy as we head into winter here. And so natural gas is one to watch. And if it is accused or shown that Russia played a role in destroying this pipeline between Finland and Estonia, perhaps out of some revenge for Nord Stream 2 or Finland's recent behavior vis-a-vis NATO, that could really lead to an interesting and unfortunate escalation. Coal, obviously, China is importing an enormous amount of coal. I saw today that their imports of coal are up 80% year over year, which could be, if you were paranoid, a sign that they may be preparing for something that the rest of us don't yet know about. But price-wise, coal is pretty well balanced, and we're headed for another record production of coal, which means we're going to have another record consumption of coal because we believe every molecule of fossil fuels produced will be burned by somebody somewhere. So that's sort of the overview of the key energy markets. Gold, we're keeping a very close eye on the arbitrage between Shanghai and London. That arbitrage gapped open over the weekend and then quickly closed yesterday. And that's a very fascinating set of prices that you can watch on your Bloomberg terminal. It takes a little mathematical transformations of the charts to get them just right. But we have seen the spread between gold for physical delivery in China be as much as $100 an ounce higher than London, which is interesting. And when we put a post out on notes that I hope they have a lot of physical gold in London, because if that arb stays open, you're going to see people shorting it in Shanghai, taking delivery in London and flying it to China. And maybe that's the intent. And so that's something we're very, very closely watching. And then obviously, silver is the widowmaker trade. It's like trading natural gas. And so we just watch it. We don't really try to predict it. Although some of the challenges in the solar sector and renewable energy sector could put downward demand on silver from an industrial perspective. Copper, in our view, is pricing in that the green energy transition is not going to happen. And then if you just look at lithium prices and copper prices, if we were truly going to spend all that money in the 5-10 years ahead, you wouldn't expect these prices to be where they are today. And we respect market signals around here at the Chicken Coop. And I think copper in particular, because no matter what you do for a sort of electrify everything agenda, be it nuclear or renewables, you're going to need copper. And copper's just not pricing in a severe supply gap. Look, copper's at an elevated price historically, but it's nowhere near what it would be if we were truly going to do what governments are, quote, mandating that we should do. And mandates can be overturned, which is what we're seeing beginning in the UK. We wrote a piece recently called The Great Backpedaling is Upon Us. And we're starting to see the soft left, as we described it in that piece, have a look at what it really means to institutionalize these mandates and what it means for the standard of living for their constituents, and they're walking away from those commitments. And so that's sort of a high-level tour that we see today. All eyes, of course, on the Middle East. We do think, I should say, that a big loser of the weekend is Ukraine. If we go back to this Kevin McCarthy losing his speakership in the House, I think that was a tactical mistake on the part of the Democrats, because his replacement is not going to be friendly to the Ukraine agenda. And they'll probably be looking to hang Ukraine on Biden ahead of the election year. And so Israeli military needs are a convenient cover to de-emphasize the amount of money and arms heading to Ukraine. And I think it must be said, a big winner of the weekend is Putin. And whether he played a role directly with Iran and Hamas remains to be seen. But it's bearish for Ukraine, which by extension is very bearish for European energy. And I don't think it's a coincidence that all of this exploded just as Europe is heading into yet another winter. So I'll stop there. That was probably a lot, but that's our worldview.
Okay, that's thank you. That was good. Okay, so oil could have a rapid repricing. Sweden's got some issues with their natural gas. Coal, China's importing it at a record amount. There's an interesting gap between China and London going on as far as the spot price to what it is to deliver it. And copper, you're not seeing the demand pick up. If the EV narrative is true, the copper price is not dictating that.
Yeah, Finland, not Sweden, but other than that, you're
Finland,
correct.
Yes.
Yes.
Sort of the same geography. I'm American.
Yeah.
You got to forgive my geography.
It's all cold up there.
Yeah. Interesting. Okay, any thoughts on platinum?
It's not really a market that we have spent a lot of time digging into, to be honest with you. And so I wouldn't have. Yeah, I like to always identify when I don't necessarily have anything special to say on a topic, because there's nothing worse than pretending like you do when you don't. And so It's just not a market that I've traded or ever followed very closely. I understand the industrial applications for it, but I just kind of view it as a price-taking commodity market. But I'm sure those who follow the market more closely will be disappointed with that answer.
And how about uranium?
Uranium is fascinating. Of course, we've had this recent step up in prices and maybe a small pullback here in the past few days, but I do think that the secular trend for nuclear in general and uranium by extension is still bullish. We think we're going to see what happens up at COP28 this year, but I think we're seeing that there is no path to reasonable decarbonization that doesn't run squarely through nuclear. We, of course, are particularly interested in some of the off the beaten path applications for nuclear. We wrote about industrial steam, a piece called Gaining Steam, where we talked about how SMRs are kind of ideal for use at brownfield sites with good security to do cogeneration of both electricity and steam, which a lot of these major manufacturing sites need. Most people don't realize that the emissions from the production of industrial grade steam, the global emissions are actually larger than the sum of transportation and aviation.
Wow.
And for all the noise and talk that we hear about electric vehicles, there's a huge wedge of carbon abatement potential. And these later generation nuclear reactors offer the potential to generate pretty reasonably high grade steam that can tackle a big chunk of that pyramid. And the beautiful thing about SMRs, of course, is that the radius of concern is far smaller than at traditional large modular reactor sites like we would see with the big smokestack or the steam stacks that are so synonymous with what a nuclear power plant is. And so there's a very fascinating project between X Energy and Dow that we profiled in that article, where they're going to pilot, not really pilot, install an SMR at one of their integrated chemical facilities along the Gulf Coast and generate both electricity and steam, which traditionally is a task that has been done with natural gas very efficiently. But and so there's a lot of potential in the industry. Of course, you could also retrofit existing nuclear reactors and use some of the excess heat that is produced to run some direct air capture units if you wanted to get fanciful. So there's all manner of ways in which a properly designed decarbonization strategy with nuclear at its center could actually make meaningful impact. And in those scenarios, of course, the demand for uranium would be high. And we all know that the price of uranium is basically irrelevant to the cost of operating a nuclear facility. And so unlike the price of oil, the price of uranium could quintuple from here and nobody would really feel any pain. Whereas if the price of oil quintupled from here, the global economy would collapse. And so that's always been the bullish case for uranium. But it's a difficult one. We had the CEO of NextGen Energy on as a guest for our Pro Tier a couple of months ago. It was a very fascinating conversation, that grade that they have up in Canada. And look, we don't give investment advice. We don't own any stock, and we weren't compensated for that interview. He was just nice enough and was a Doomberg fan and wanted to reach our audience. Some really interesting and fascinating things going on in this space. If only we could get out of our own way from a regulatory perspective. And so that's where we sit. And one milestone I'll give your viewers to watch for is there is a move in Michigan to reopen Palisades. And the new owner of Palisades has just submitted an application with the NRC for one of the myriad applications that they have to make. And we'll see how responsive the NRC is, because traditionally, as we wrote in a piece called Nuclear Waste, the NRC has been the key barrier to a nuclear renaissance in the US. It seems as though their job is to destroy the nuclear sector, not to just make it safe. But if Biden's newfound appreciation for nuclear power manifests its way through the bureaucracy, action on this Palisades license renewal would be an interesting milestone to keep an eye on as a uranium investor.
Yeah, well, we hope the Nuclear Regulatory Committee, we'll see. We shall see. Okay. All right, listener questions. Quick thank you to the Hive for editing and keeping all your thoughts to one comment. That saved me a couple hours on the back end that I could devote to getting more content and interviews. So, gracias. Okay, we'll start out with oil and gas. Espren wants to know, he's talking about the Strategic Petroleum Reserve, the SPR. The SPR is pretty much empty. What are your thoughts on the ability of the Biden administration to keep the price of oil contained? What are their alternatives?
So the Strategic Petroleum Reserve is a series of caverns along the Gulf Coast that can hold up to 700 million barrels of oil. Just to give our your viewers a benchmark, the world consumes about 100 million barrels of oil a day. So it's about 7 days of global supply, but the U.S., uses a fraction of that. The U.S. is also a net energy exporter today, whereas when the SPR was conceived and constructed, it was believed by U.S. leaders that the country was in a post-peak oil era, and that U.S. production would begin a long and irreversible decline. Of course, that's no longer true with the advent of horizontal drilling and shale and so on. We have 350 million barrels of oil left in the Strategic Petroleum Reserve. Biden has drained approximately 300 million barrels. The expressed intent of that draining was to manage down the price of oil ahead of the midterm elections, which was successful. There is some question as to how much of the 350 million barrels that are in the SPR could practically be lifted out without damaging the infrastructure, the caverns. But by and large, the view is that that piggy bank has been tapped. And, the million barrels a day, even though it's only 1% of global sort of flux, that was meaningful enough to take oil from 130 to 70s, and that's no longer there. Having said that, China has a huge Strategic Petroleum Reserve with which we have far less reliable insight into, and they may be interested in managing oil price down. I'm pretty sure that the Middle Eastern countries, at least as long as the war doesn't get out of control, aren't interested in seeing oil spike above 100 again. They'd like it in this $80 to $90 range, which is kind of a sweet spot where they can make a lot of money, but the global economy doesn't really get harmed at these prices. And so we shall see. The SPR as a tool to manage down prices is reaching significant diminished returns. Let's put it that way.
Yeah, I had a lot of people ask me, why is gasoline so expensive? And I said, well, actually, it's pretty cheap. If we didn't have the SPR and we weren't draining 1 million barrels a day, it'd probably be 10 or 12 bucks a gallon.
But also, let's not forget that oil is an input into gasoline prices. But what really drives gasoline prices, of course, is refining spreads and the demand for the co-products. The refining of oil is the ultimate co-product economic experiment, really. And it's really, for outsiders who don't know, it can seem puzzling. But in fact, you could have gasoline prices go negative with oil at $100 a barrel if the world was deeply short diesel. Like they had to give it away, and these things are so, inelastic. Well, there are many cuts of the refineries that do trade negative, the heavy sulfur oils and so on that are no longer being burned. It is not uncommon for a product of a refinery to be given away or paid to take off your hands, because you have value to be made by, it's a co-product economics. There's only so much distribution in the molecules and only so much capacity within our refining network to change that distribution. And so if diesel's in short supply, gasoline prices could tank. And if diesel is long, the other scenario could play out. And so it's not just the price of oil that drives the price of gasoline at the pump. And this is not well understood by most consumers, let alone politicians, who often have no idea how this works. We wrote about this on several occasions. The most recent one being a piece we wrote on September 20th called Molecular Tourism, which explains why it is that the U.S., even though it is net energy independent, still exports an enormous amount of oil and imports an enormous amount of oil. And it comes down to the mismatch between the oil we're producing today and what our refineries were built to process.
Okay, so yeah, basically, when you get a barrel of oil, you can't just turn that entire barrel of oil into diesel. It's got to be, these percentages are wrong, but 20% diesel, 15% gas, and you go down the list all the way to kerosene or whatever, and that's kind of what you got, right? And depending on the demand, dictates the price of each one of those.
Right. So, I mean, there's some flexibility. If your refinery has invested in, turning short chain molecules into long and vice versa, you can flexibly respond to market dynamics to an extent. But yeah, you're kind of limited to what's in that barrel. Now, but again, there isn't a barrel of oil. There's something like 100 commercially quoted grades of crude. And as we said in that piece, like, the gamish of molecules that are pumped up from underground is, in all practical terms, unique to each well drilled. And there are dozens and dozens of commercial grades of oil. And each of these are characterized by ranges of acceptable molecular and physical composition and characteristics. And look, molecular weight distribution, density, viscosity, sulfur content, all of these things matter. And if you've created like we have in the US, a fleet of refiners that were really geared towards processing the heavier end of the spectrum, and they have a really good ability to deal with high concentrations of sulfur, and you want to process those crudes. And so, as we said in the piece, Biden's approach to Venezuela makes perfect sense when you look at the fact that we're producing light sweet crude, in the Permian, which ultimately we're exporting a lot, and we're importing medium and heavier grades. And this, of course, is why killing the Keystone Pipeline was so stupid, because the grades in Alberta are perfectly matched for what our refiners on the Gulf Coast would like to process. And then there's the whole issue of the Jones Act, which means we can't ship what we refine from the Gulf Coast to California and New England, because there are no U.S. flagged ships to do this, and so it's illegal to start at one port in the U.S. and end up at another. There's all these nuances in the market that most people don't realize, but yeah. So the price of gasoline at the pump, yes, oil is an input into it, but the complexity of the refining network, there's all manner of midstream companies that exist to blend various crudes so they can hit refiner specs before they get processed, and so on. And then on top of all of that, our refinery network has been operating at a 95+% capacity utilization rate for a very long time. We've not built a new refiner in this country, a major one, in 40 years. When you run refinery operations, any chemical plants at 95% capacity utilization long enough, things break. We're running pretty tight. The world is short diesel in particular. And so, yeah, it's much more complex than SPR.
Okay. That makes sense. Okay. You kind of touched on this. He also asked, how will the tension in Israel impact oil?
Boy, it's not the tension in Israel per se. It's the tension between Israel and Iran that everyone is keeping a close eye on. And whether Hezbollah joins the war, which is viewed as a direct proxy for Iran by the Israelis. And again, we have Senator Lindsey Graham out saying that we should be bombing Iranian refineries. I don't think they think these things through. If we bomb the Iranian refineries, what do you think the price of oil is going to be?
Right.
And the boomerang of that. And then again, if we're going to normalize the destruction of critical energy arteries, that hurts every human on the planet, because prices set at the margin. So coal might be $140 a ton today, but if we start doing things like that, we might get back to where we were last year, where actually coal on an energy content basis was more valuable than crude oil, which was amazing for us. It's first in history. We were, I think, one of the few to highlight this price discrepancy. We did it in several of our pieces, and that was because coal is easier to ship and store. And even though oil is more valuable and can be refined into all these great products, when you're truly in an energy emergency, knowing that you can stockpile a giant mountain of coal is valuable, and the market was pricing that value accordingly. And so if we went down the Lindsey Graham neocon path, it could get very ugly. And frankly, to be totally transparent, I'm scared. Like, I have draft eligible children, and I generally pro peace, which used to be a liberal view, not anymore, weirdly. But this is not good. Anybody cheering these events has to have their head examined. I mean, forget about, in addition to the deep personal tragedy of every individual directly impacted over the weekend, there is the risk of significant proliferation of really terrible violence and total disruption to our way of life, that I think these armchair military commanders who are watching the news and rah, 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 USA, have no idea what they're getting into. Like, war should be declared by Congress. I know it's crazy, but I'd like my congressman and my senator to at least have had a vote before my son gets called into the draft. What are we doing? We're just stumbling our way to World War III. Let's wake up and have a discussion about it at least. It's crazy, to be honest with you. It's Steve and I. Sometimes I feel like I live in a bizarre world.
Yeah. Okay. John wants to know, how do you see the future of Germany and Europe without cheap gas from Russia?
Well, it's going to involve substantial deindustrialization and reactionary political upheaval in the form of right-wing populist parties ascending to power. And we're seeing that roll out in Germany just this weekend. There was some very fascinating local elections in West Germany, the old West Germany. The AfD, the party that is so extreme that German elites are trying to outlaw it or ban it, as though that's not going to boomerang on them. They are now the second most popular party in two of those regions, which is a shocking result. The Greens are getting crushed, but the damage is done. I mean, the pipelines are blown up, the nuclear power plants are shut down. Heaven forbid we have a cold winter, and knock on wood, pray that we don't. But of course, and if what we theorize is true, that Ukraine is a big loser here in the Israeli-Palestinian war, that really hangs the German government out on a limb, because this war was held up as the reason for the sacrifice. And Putin is gonna, whenever Putin has significant geopolitical advantages, energy prices go up. I mean, this is just a very simple way to look at the world. Is Putin winning? Prices go up. Is Putin losing? Prices go down. Putin, if our hypothesis is true, that the fatigue for funding the war in Ukraine has reached significant levels in the US, that this could really lead to a feeling of despair in Germany and Western Europe in general, especially if it's a tough winter, again, which we hope it's not. But if we start blowing up each other's pipelines, it could be a tough winter, regardless of what the weather does. And so again, these flippant calls for actions that would amount to declarations of war, we're very loose with what we say in the West. And I think it's extremely dangerous behavior and should be condemned.
Yeah, so do we. Okay. Rusty wants to know, now you don't give financial advice and talking specific companies, but he wants to know, it looks like he's looking to invest in oil tanker and LNG carrier companies. How do you see that from a macro perspective?
I mean, I think there's a secular bullish tailwind to their business prospects, whether they are properly priced into their equities. I couldn't tell you. That's for each individual investor to assess on their own. Generally speaking, the commodity sector is thoroughly underpriced relative to the general market. If you just look at the ratio of the BCOM index divided by the QQQs, for example, it's barely off the lows. Hasn't really made any major inroads. And so our philosophy is that we earn money in fiat, we save by buying real assets like gold and land and collectibles, and then we invest privately where we can hopefully impact the outcome and produce some what we would call sweat alpha, where our own networks and skills and advice to the leaders of these companies allow us to make more money more quickly. So for all of these opportunities in the energy sector, we would advise and have advised the residual clients we've maintained in our consulting business that the private markets are the way to go. You're not being rewarded in the public markets on a price to earnings or cash flow basis, and private companies are free to engage in all manner of speculative plays that public companies can't. And if you have a good management team that is committed to remunerating shareholders vis-a-vis dividends, you could make really, really good money in the private markets. And so, and then on top of that, the shipping industry in general is a dubious place for investors to participate in via public stocks, because there's a long track record of principal agent problems between the management of such companies and their shareholders, which is probably a whole other topic that we can dive into. So our advice would be, if you can get private deal flow, that'd be a better way to go. But to answer the question directly, it doesn't seem like there's going to be a shortage of demand for such services in the years ahead. Okay.
It's got some nice tailwinds behind it from a macro view, is what you're saying. You know, you mentioned something real quick that you were on Andy's channel, finding value.
Finding genius, I believe. Yes.
Yeah.
And we're still looking for it, for the record. I mean, it's.
You said something to the effect of save your net worth in acres and ounces, and you went on to say that having real things over the next decade will be of the utmost importance. Can you elaborate?
Yeah, so as I said, we earn in fiat and we save by buying real assets, and then we invest privately. We don't measure our net worth in dollars. We measure it in ounces and acres, but we measure our liquidity in dollars, of course. And our liquidity is both a emergency safety net, but also our gunpowder for for private investments as they arise. And so if you're investing predominantly in private markets, there are two things that matter. One is deal flow, which comes down to networking. And then two is the ability to write a check quickly. Those two things get you in many good deals. And so we keep a lot of dry powder for such opportunities. But the floor of our net worth, we measure in, real assets. And so, and when I say we earn in fiat, we recognize we live in a dollar world, and, we pay our taxes, and, we participate fully in the Know Your Customer AML regime, and so on. And we don't try to have offshore accounts and all of these sort of shenanigans. We believe in paying our fair share of taxes, whatever that number might be. But in general, I in my sort of own personal net worth calculation, I have a category that I call after-tax tangible. What is the sum total of things that I own, free and clear, for which the money that I use to buy those things has already been taxed? And so my home or land or collectibles or gold or silver, or, and I don't mean silver like Fizz shares that I own in an investment account, which I own some. I mean American Gold Eagles, or, pick your favorite, that I can go and hold in my hand and literally give to my children. So that's the way we like to look at the world. It's not for everybody, but we are defensive pessimists. Like, I feel comforted knowing that if the dollar hyperinflates, I still have X number of acres and X number of ounces from which to restart. And one of the beauties of a subscription business is you could always reprice when the time comes. So yeah, we feel pretty hedged against inflation, but that's not for everybody. We're in sort of wealth management part of our lives. If you were building, you might probably would want to be more aggressive in the public markets and so on. But I suspect many of your listeners are in a similar phase, and so that's the way we look at it. Everyone has their own approach, which of course is why we never give investment advice, because we can't know what people's particular situations, needs, risk tolerances are. We don't mind talking trends, and if we teach somebody something that they then incorporate it into their own investment process, that's great. That's what education is all about. But yeah, I feel good knowing that in the worst case scenario, I still have my gold. And I think that's what the purpose of gold is, right? It's a tangible store of value that has passed thousands of years of tests. And so it seems to me a very reasonable place to save money, not to invest it. We don't look at the price of gold as a judgment of how smart we were when we bought it, right? Yep. We look at the price of gold as really a reflection of the value of the dollar. So yep, that's our view.
Yeah, completely agree. Okay, moving on to uranium and nuclear power. Robert wants to know about price forecasts for uranium. How do you see this one playing out? How high could it go?
Well, I mean, it could go to $300 a pound easily, and nobody would care. Like I said earlier, not saying it's going to. It could pull back from here. I do think you're swimming with the current if you're playing in the uranium space. To the extent that we continue down this carbon emission fixation, we are seeing more and more people realize that really there is no way to decouple human flourishing from carbon without nuclear. And we are bullish human flourishing. And even in the absence of the carbon pressures, I think nuclear makes the most sense. You start with the highest energy return on energy invested technology known to humankind, and you also start with the highest energy dense technology. Now you mix in taking advantage of the heat in addition to electricity, and suddenly you get very, very interesting. And so there's some issues. There's the need to ponder our national strategy around enrichment, and the tensions with Russia have only highlighted that potential weakness for the later generation reactors that require a bit more of an enriched uranium. But those are all very solvable problems. You're trying to tell me that the U.S. military doesn't know how to enrich uranium? I mean, these are not insurmountable and measured in single-digit billions, as opposed to the hundreds of billions we're wasting on solar and wind. And so I think eventually we'll get there. But how high it could go, it could cut in half from here. and nothing would surprise me. But I think by and large, especially with the Sprott Physical Uranium Trust soaking up incremental inventory as their assets under management continue to swell, you generally have good runway with limited downside. And those are the types of opportunities, again, if we could express them in a private market, where we would be interested in sifting through the deals on offer.
Yeah, the Sprott Physical Uranium Trust is at about a third of the planet's demand per year, just sitting in a warehouse unavailable to Westinghouse. I love it. Okay,
Honestly, it's like surprising that that's legal. It's like
I've been saying the same thing.
Like it's like they're let's just say they are indirectly cornering a market with a wink. It's just really amazing to me. I love the people at Sprott. We had the CEO of the one of the trusts as a guest more than a year and a half ago, where we did a deep interview with them. But it still boggles the mind to me that you can just go and de facto corner a very thinly traded market like this. I guess, God bless them, but that's interesting to say the least.
I've said this on the show several times, in that I think after this next uranium cycle plays itself out, things like the Sprott Physical Uranium Trust will not be legal, because politicians will realize, hey, that was cute. You can do that, with gold and silver, stack them on pallets as much as you want, but taking a key element out of the supply that has to do with, global energy, like, that's off the table now.
Now, they would say they are trying to make the market more efficient, and, there's price discovery clarity and all. So let's be fair. Like, we're not accusing anybody of anything illegal. It's just surprising to me that it's not illegal.
But we're grateful it exists.
Yeah.
Okay. Jeff wants to know, Doom, in your opinion, which company's SMR technology looks the most promising, and how many years do you expect to see it until you expect to see it in use?
So it's an interesting question. I would say the technology is the least important thing that matters in whether and how any individual company's SMR technology makes it to the market. What matters is their ability to navigate the NRC, period. At least if you're focused on sort of U.S. deployment. It's the same with respect to other regulatory regimes around the world. So if you have a company that has interesting SMR technology that is being deployed in a very nuclear-friendly regime, then go for it. That's very interesting to us. But the technology is the least important thing. It really is. All of them are great. Any SMR design is infinitely superior to anything that coal, oil, natural gas, wind, or solar could produce. And so go for it. Like, we'd be for all of them. Now, whether any particular company makes for a good investment is a different story. But if I was an investor looking to deploy funds across a suite of SMR producers as options, the only thing I would look at is where they are in their regulatory journey. And that's where NuScale really has advantages, because they have an approved design, right? And so, because that's what's rate limiting, unfortunately. Like, it's not a technological issue, and it's not even a financial issue. It's a pure regulatory issue. Nuclear is expensive and takes long today out of choice. We have decided, because environmentalists have captured these regulatory organizations, we have decided to make nuclear expensive and untimely because they don't want it. If we take back our politics, we can have nuclear in the blink of an eye. I mean, France built out 60 gigawatts of nuclear power 50 years ago with no issue. You're trying to tell me we can't do better than what France was able to do 50 years ago?
Yeah.
It's a choice. So people are always looking at the wrong thing. Fusion is irrelevant. We have the solution. It's fission. The particular nuances of any design are really irrelevant. What matters is the politics. What matters is the propaganda. What matters is the regulatory regimes. And unless and until we start playing that game, the environmentalist game, on their level or better, we're going to keep losing. They have run circles around the industry. In fact, I was on a podcast recently, a nuclear-focused podcast, where I joked that the host and I could start a really successful consulting firm where we helped the nuclear industry radically improve their public relations war machine, because that's what it is. It's a war, and they're losing. They're getting routed. These are naive engineers who believe they're doing good for the world, and that should matter. It doesn't matter. Your opponents don't follow the rules. Your opponents are liars. They're cheats. They're scoundrels. You're being assaulted by people who hate you. Wake up and fight back. There's no pleasing them. They'll come out and prove this. And so, hopefully the Renaissance, and there's some very, very powerful advocates in the nuclear space that I think are making a real difference. And to the extent that we've participated in the debate in a positive way, it's something we're proud of. But let's not kid ourselves. Like, this is a propaganda war, and you're getting your asses kicked. Like, get off the mat, fight back.
Yeah.
So anyway, pardon, that's a little passion of mine.
Yeah. Stop going down the nth degree of safety just to appease
how many
an
nines do you need?
crowd.
Yeah, this is Lucy with the football. They're just going to pick it up anyway.
Yeah.
Right. I mean, and so it's frustrating to watch because it is the best technology. It is the most pro-human, life-nourishing, economic development-oriented, high energy density, high energy return on energy invested technology. If it were invented today, as Josh Wolf would say, we would brand it elemental power and we would hail it as a civilization-saving development.
Yeah. Okay. So as far as SMR's technology, blanket statement that they're all good, but pay attention to which ones have jumped over the most political hurdles.
Correct.
And so far that's NuScale.
Yep.
Okay.
But not a recommendation to buy NuScale.
No, not a recommendation. Just pay attention to that metric, not the other nuances. John T wants to know China General Nuclear. What are their chances of profiting in the current market?
I mean, the last thing I would invest in is a Chinese company of any kind, regardless of. I mean, I'm being serious.
I hear you.
I like, for a Western investor to deploy money, and so you might as well just gamble on crypto because it's just letters on a screen. You have no claim. You have no claim on future dividends. You're buying a certificate in the Cayman somewhere. This is I couldn't tell you because it's just so far off of my investment potential screen. You cannot, as a Westerner, deploy capital in China. They just do not have the legal structure or the recourse, intellectual property protections, or shareholder rights that you and I and others in the West have come to assume. Now, just because it's 3 tickers on a screen that has an ADR and it trades on the New York Stock Exchange, that doesn't mean anything. And look, it might go up tenfold, and you might be able to sell it in a greater fool's trade. But if you're investing in China, you're investing in a greater fool's trade. You're not investing to get any kind of shareholder remuneration. And so, caveat emptor.
I learned that with China Mobile. It was locked up for a couple of years, and I watched the stock double and then half and then double, and a complete inability to sell it. Okay. Where are we? Let's move on to gold and royalty companies. Compass wants to know royalty companies. What is the effect of the rising interest rates on their business model and profit loss?
These tend to be pretty capital light businesses. And so I think the thing that matters most is whether or not their mines get developed or the mines that they already have rights to continue to operate. And so to the extent, I suppose, coming at it cold just hearing the question now, if you own a right to a mine that is not yet developed, I suppose raising interest rates are a hindrance to ultimately getting that mine financed and operable. But at the same time, if the price of gold doubles or triples from here, then interest rates are going to be irrelevant. That mine will be bankable. And so assuming, permitting and all that other stuff. But I generally a very big fan of royalty plays beyond gold. In the oil and gas sector in particular, I think, the Horizon Kinetics team has a very interesting approach in their inflation ETF, where they focus a fair bit on royalty plays because they view them as excellent hedges against inflation, and why would they not? And they are a very asset-light way to play the commodity boom. Now, it's a popular trade, so whether the value is fully reflected in those stocks, again, comes down to your own analysis of what your expectations are for the commodities in general. But generally speaking, again, another example where I think in the private markets you can do better. You can get these bespoke deals where somebody needs to get out of a position and the market isn't developed, and you understand the deposit and the management team, and you're comfortable that yes, the IRR of 20% on offer is real, and then you could borrow at 5% to buy it, then go for it. Yeah.
Okay. And follow up, what is their risk if and when mines are being nationalization confiscated by governments?
Yeah, well, if you have royalty, a royalty promise on a Chinese mine is different than a royalty promise of a Canadian one, right? And let's just be honest. And then in between, you have Peru and Chile, and pick your favorite. And so this is not a it's not a game for lightweights. You have to be sophisticated appraiser of risk, um, and spread your bets around, for a diversity of risks in our view. But yeah, nationalization is always a risk in the mining sector, as you know, and in the proper boom, contracts are often ripped up and rewritten, and this is a risk that you always have to take that can destroy your value. We had some pushback. We wrote a piece about the Pebble Mine in Alaska, and it was a fascinating piece because Obama traveled there as a candidate, and he said something which is really amazing, which is, "This is no place for a mine." And that begs the question: is, well, where exactly is a good place for a mine, Mr. President? And it turns out, of course, it's in all of the developing world where environmental standards are lax, and a huge increment of the recent growth in copper has come from the Congo, which I suppose is a great place for a mine because you could exploit child labor and ignore environmental laws that you would have to succumb to in the developed world. And so really investing in mining generally is investing in geopolitical and regulatory risk. And that's why it's difficult for average investors to really outperform.
Yeah. Okay. Nautica wants to know about, are you still bearish on Barrick Gold?
I don't ever remember being bearish on Barrick Gold.
I'm sorry, bullish. I said bearish. Bullish.
And I frankly don't remember being bullish on Barrick Gold either. And so I guess the answer is no, because it has the word still in it. No, in all seriousness, gold miners are difficult. They're often the bane of many gold bugs because they tend to be substantially underpriced for a very long period of time. They will have their moment when there's peak despair. That'll be the time to get in. I don't think we're at peak despair yet. But again, we have never really, one way or the other, been bullish or bearish on any individual stock. And it's just not what we do. There's lots of people who do those things, and they do them better than we could. And so we like to stick to our knitting.
Okay. Copper and batteries. Nautica wants to know, how will the price of copper perform in the years ahead?
Again, as we mentioned earlier, it doesn't seem like copper is pricing in this so-called green energy transition. Batteries is a separate question, of course. And we're seeing amazing developments in China as they do what they always do, which is the dirty work we don't want to do to dominate an industry. And they're really beginning to roll up the EV battery space. We wrote a piece earlier this year called Build Your Dreams, where we predicted that BYD would overtake Tesla, and they have effectively. It's fascinating to me. The first week in China, Tesla sold 1,000 vehicles and BYD sold 51,000. It's
Wow.
That's not a typical week, and it's the first week of the quarter, and who knows what's going on at the factories there. But BYD is a beast. Warren Buffett is a big backer. They're selling battery technology to Tesla. There's this whole wave of sodium-ion batteries that are being deployed in China and developed in China at breakneck speed. They're killing us in batteries. And so, but separate question, what does it mean for copper? Of course, it's bullish copper. If battery technologies become cheaper and widely deployed, you need copper wire to move all that electricity around. So that there's still secular tailwinds for copper. I'm just saying, when I look at the price of copper and I look at the projections of what people are saying for this so-called green energy transition, I just don't see it. And I think you'd see it in the copper market. Like, there'd be signals like, hey, we need a lot more mines. Like, what's the last big copper mine? QB3, I guess. QB2 and then QB3 after that, from Tech Resources. Like, I don't see, much like uranium, like, where's it going to come from? Like, the people are just kind of sitting on their hands in the copper space, and the market is kind of shrugging. So I don't see a true implementation of a ban on internal combustion vehicles being priced in the copper space. Now, look, if you think that's actually going to happen, then copper's a deal.
Yeah.
Right.
Yeah.
I don't think it's going to happen.
There's a lot of issues with that. My brother recently took kind of a trip across country in an electric vehicle, And he said it was miserable because every hour and a half they had to stop and charge the thing for an hour and then get back in and go again. So I think, last time you were on the show, if you became king, you mentioned 4 policy implementations that you would do, and one of them was plug-in hybrids over electric vehicles, which would completely solve that problem. You do all your driving around in the city on electric, and then you simply go to a gas station whenever you make a trip.
Yeah, and then when you stop at the hotel, you charge overnight and use the battery again.
Problem solved.
Problem solved. It is amazing to me that we have this myopic focus on BEVs, which I think is a catastrophe.
Yeah.
It is a catastrophic waste of battery materials. And if battery materials are the constraint, that's management 101. You have to manage to that constraint. It's amazing, but it is what it is. One of the things we always tell our subscribers, especially during our pro tier presentations, don't focus on what you feel it should be, focus on what it will be. And we just did a whole presentation on carbon capture and sequestration, and many people in the oil and gas sector, we would have such people as subscribers, especially in our pro tier, are like, well, why would we do this? This doesn't make sense. Like, don't focus on what makes sense. Focus on what government policy dictates is going to happen. Yeah. So because we've learned the hard way, like everybody else, that this is it's something that is a silly policy can go on for a very, very long time.
Yes. Yeah. Don't focus on logic. Focus on what the policies are.
Well, that's back to SMR. Like, who cares if your design is 5% better? Where are you in the regulatory process?
Yeah. Yeah.
Because otherwise, it's just going to be some fancy PDFs on a computer somewhere.
Yep.
Like, the government is controlling who wins. Focus on what the government is saying and doing.
Yes.
It's sad. Again, this is the thing. Like, people who are interested in nuclear are probably have an engineering science mindset. That's the most dangerous thing you can have as an investor. Because this is political. It's not scientific. All of them are infinitely better than the other options. Comparing them amongst themselves is dumb. What you need to do is see the political savvy of the management teams and bet accordingly.
Yes. Yes. Okay. You kind of answered Blaine's question there on batteries. And okay. Moving on to, I guess, macroeconomics with the banks, and then a question on Ukraine. Do you think Zelensky will negotiate before or after the last Ukrainian man standing?
I think, we've not written much about this war. And I will say, anytime we talk on topics where we are not experts, we like to give the disclaimer that this is more, opinion than expertise. It is my opinion that the war is not going near as well as we've been told, that Zelensky's in a very tough spot, that the catastrophe that happened in the Canadian Parliament was way more damaging than is being let on. And there's significant fatigue amongst the conservatives for funding this war. And I think the Democratic Party miscalculated in basically stabbing Kevin McCarthy in the back. This is something we're thinking about writing, but it's not really out there. But we listened to his press conference with great interest. So Kevin McCarthy, of course, Speaker of the House, ostensibly ousted by the far right wing of the Republican Party. But in reality, the decision to let him go was done by the Democrats. And what do I mean? When he was negotiating to become Speaker of the House, 15 rounds of votes, you may remember, like the House is so evenly split. One of the things the holdouts wanted was the ability for a single member of the House to be able to table a motion to eject a speaker. And Pelosi, of course, never had that while she was Speaker. It's been in and out of the various rules of the House with each session of Congress, they get to pick their own rules, right? And so Pelosi came to see Kevin McCarthy, as he says, as the story goes, and said, give him that. In the unlikely event that they try to oust you, for the sanctity of the institution, I will get the votes you need to make sure that they can't topple you with just a couple of people. Fast forward to when Kevin McCarthy tweets, bring it on, Matt Gaetz does, the Democrats voted in unison against him. And the 10 or so Republicans that voted against him, he sunk them. Okay, now you're going to get a pro-Trump Jim Jordan, who would owe his speakership to Trump's endorsement. Trump is running against Biden, and they want to hang Ukraine on Biden, especially since, by the way, we impeached Trump on Ukraine, even though Biden's son was on, the whole story.
Yeah.
And so I think Zelensky's in a bit of a spot of bother, as we would say. And Putin has played his cards as Putin does well. I'd listened with great interest to his annual speech that he gives, this 3-hour-long marathon, did not seem like a man under much duress. And I think the developments in the Middle East, whether or not Putin had a hand in them, are potentially a serious threat to the Ukraine situation. And connecting those dots is not something we're seeing in the traditional media yet. So we would be, again, we're trying to figure out how to write this because it's not a typical Doomberg piece. It's not really our expertise, but connecting dots is what we enjoy doing. And just listening to Kevin McCarthy's post-vote speech where he laid out what Pelosi did to him is one of those stories that sticks with you. First of all, I mean, shame on him for believing in Pelosi's word, but and he's standing in a long line of people who had, a political promise reneged upon in Washington, D.C. But I think the Democrats were a little too cute, and I think they're not going to like what comes. And I think the big milestone to watch is this universal support for Israel in Washington. I mean, there's some people who are opposed to it, but the support is bipartisan and overwhelming. Whether the president can successfully tie funding for Ukraine to funding for Israel is the next big political battle. And he has put out there as a trial balloon that he wants to put $100 billion for Ukraine, a one and done. This is it. We're over. And that, of course, buys him through to the election. And there's no way the Republicans are going to be foolish enough to fall for that. I'm speaking sort of politically, not, strategically. Yeah. And so I think kneecapping Kevin McCarthy is the domino that might actually ultimately topple Ukraine. And those are the types of stories that we're attracted to. And sometimes we're wrong, oftentimes we're wrong. But when you're right and you see those things play out, it gets to be pretty interesting. And we're early here. But that's where we would view, I would say, Zelensky can't be pleased with the outcome of his trip and the developments in the Middle East. Neither of those is bullish for Ukraine. And then what does that mean for German politics, Polish politics? There's a big election in Poland this week that you should keep an eye on. We saw AfD surging in the polls in West Germany, not just in East Germany, which is their stronghold. Slovakian president, not very pro-Ukrainian. We're starting to see what we have been warning about, which is this reactionary political resistance to the policies that we have put in place, including the funding for the Ukraine war. And they're commingled, right? Like renewable energy policy in Ukraine, it's all the same crowd. And so if you're unhappy about renewable energy, then maybe Ukraine is a victim of that. We're not, again, cheering for any of these outcomes, we're just observing them. It could be a very, very bad winter for Western Europe.
Yeah. Okay, and wrapping up, the question on the banks. Why, after 15 years, are there still banks that are, air quotes, too big to fail?
That was a necessary consequence of kicking the can down the road 15 years ago. It is, whenever you socialize losses, you get the cancer that we now have. Everybody knew it at the time. It was just decided that long-term cancer is better than short-term death, even though it's never really short-term death. If we had taken our medicine back then, we would almost certainly be in a better position now. But taking medicine is a decidedly poor thing to campaign on. And so, so you just keep kicking the can down the road. And we have conditioned the market to believe there is a Fed put, which has led to, look, I was thinking the other day, I remember Davey Day Trader, Dave Portnoy, on Twitter, deciding which shitcoin he would endorse. You probably don't remember this. He had a bunch of hats with all of the altcoins that are just basically,
totally worthless now.
Totally. Well, they all were always going to be totally worthless.
Yeah.
These magic beans trading hands as though they have some tangible value.
NFTs.
Yeah, the whole 9 years. And he had this whole, like, as if he was declaring which university he would play football for. And I think the name of the shitcoin was SafeMoon, and he put it on his hat. And that was actually like a real thing that mattered on Twitter. It made the news, the coin rallied on it. And I was just thinking, like, all of that is a symptom of the disease of kicking the can down the road and the global financial crisis. We have taught today's investor class that losses will be socialized. And, with zero interest rates, you get this speculative boom. Look, it's always this way. History is replete with such examples, but that was a profound moment, actually. Who am I going to play shitcoin for by Dave Portnoy is one of those events that just sticks in my mind, and it's really amazing. And so, yeah.
Yeah. Awesome. Well, thank you very much, Doomberg. If people want to find out more, where can they go to follow your work and follow you?
Yeah, we're exclusively on Substack now, doomberg.substack.com, 100% subscriber supported. Steve, it was really great to talk to you, and really enjoy our conversations, and can't wait for the next one.
The pleasure's all on this side of the table, sir. Thank you very much. Doomberg.substack.com. There will be a link down in the show notes. Check them out. Love your newsletter. Thank you very much for coming on the show. And thank you for tuning in. Support the show. Hit the like, subscribe, and we will talk to you next time.